Just a few minutes ago, we learned that Ford is undergoing a sweeping overhaul of its electric vehicle business.
Tell us what's driven these plans.
Well, as you said, it was really the customer changing their decision in the end was the big decider for us.
Ford just made a $50 billion mistake. And the F-150 Lightning is the smoking gun. Right now, brand new Lightnings are sitting on dealer lots across America. Not for days, not for weeks, for months. Rows of them, lined up under the open sky, baking in the summer heat, freezing through the winter cold, losing thousands of dollars in value every single morning the sun comes up and not a single buyer shows up to claim one. And the dealers holding them? They are absolutely furious. This was supposed to be Ford's greatest triumph, the electric truck that would carry America's most iconic automotive brand straight into the future. The vehicle Ford staked its entire next chapter on. They ran the campaigns, they made the announcements, they generated the kind of buzz that only a legendary nameplate can produce. F-150 Lightning, the future of the truck that built America. Instead, it has become the most expensive miscalculation in Ford's 100-year history. But here's the part that should stop you cold. The Lightning disaster is not even the real story. It is just the most visible symptom, the most obvious crack in a wall that is quietly crumbling from the foundation up. Because while everyone was watching the Lightning struggle, something else was happening across Ford's entire lineup. The Mustang just posted its worst sales numbers since the car first launched in the 1960s. Broncos that once had $20,000 markups are now collecting dust on lots nobody visits. Even the Maverick, the truck Ford specifically built for buyers who could not afford anything else, is sitting unsold. Every segment, every model, the same story. And Ford's CEO looked directly at investors and told them everything was fine. That is when you know the problem runs deeper than inventory numbers and quarterly reports. That is when you know something fundamental has broken inside the company. Ford spent a century building its empire on a single promise to the American buyer, that they would always build vehicles real people could actually afford. Henry Ford did not just build cars. He redesigned the entire manufacturing process specifically so his own workers could buy what they were making. And somewhere between the pandemic, the chip shortage, and a boardroom convinced that sky-high prices were the new normal, Ford quietly abandoned that promise entirely. The dealers are paying for that decision right now. So are the buyers walking off lots empty-handed. So here is the question you need answered before this story is done. Was Ford's collapse an honest mistake? Or did someone inside that company see exactly where this was headed and push the button anyway? To understand how Ford arrived at this moment, you have to rewind to 2020. Because the mistake did not start with the Lightning. It started with a lesson Ford thought they learned during the pandemic, and got completely, catastrophically wrong. When the chip shortage hit, production lines slowed to almost nothing. Dealerships ran dry overnight, and something remarkable started happening. Every F-150 that managed to roll onto a lot was marked up, not a little. We are talking $5,000 over sticker, $10,000, sometimes $15,000 over MSRP. And buyers, desperate and out of options, paid it. Every dollar. Without flinching. Ford watched this from the top floor and drew a conclusion. People will pay anything for our vehicles. That was the lesson they took from one of the strangest, most distorted markets in automotive history. Here is what they missed entirely. Those buyers were not paying those prices because Fords had suddenly become worth more. They were paying because there was nothing else on the lot, anywhere, any brand. The shortage did not reveal how much consumers valued Ford. It revealed how far people will stretch when they have no other choice. Those are two completely different things, and Ford confused one for the other. So they did what any company does when they believe they have discovered a higher ceiling. They pushed toward it. F-150 prices crept upward year after the shortage cleared. Not dramatically at first, just enough that you might not notice, just enough to feel like the natural order of things. The new Mustang launched at the highest price point in the nameplate's entire history, the Maverick, which Ford specifically positioned as the affordable truck for buyers being priced out of everything else, started pushing $33,000, $34,000, and $35,000 for mid-level trims. Even the Bronco, a vehicle that came back from the dead on pure nostalgia and goodwill, crept steadily toward territory that tested the loyalty of the exact buyers who had celebrated its return. A dealer I spoke with recently put it plainly. He said Ford started pricing like a luxury brand the moment buyers had nowhere else to go. The problem is, that moment did not last. The lots that sat completely empty in 2021 are now full, packed, row after row after row of vehicles that arrived expecting a market that no longer exists. The buyers who stretched during the shortage are not stretching anymore. They have gone elsewhere, or they have simply stopped looking altogether. And Ford is standing in a showroom full of inventory, holding a pricing strategy built for a crisis that ended years ago. Ford poured everything into the F-150 Lightning, and when they say everything, the numbers back that up. $50 billion committed to electric vehicle development, with the Lightning sitting at the center of that bet as the crown jewel. The vehicle that would prove Ford could lead the electric era without surrendering the truck identity that had made them the best-selling vehicle brand in America for over 4 decades straight. The pitch made sense on paper. Take the most trusted nameplate in the country, electrify it, deliver it to the buyers who already love the F-150, and watch the future write itself. Here is what actually happened. The Lightning launched with a starting price that felt accessible, around $40,000. Reasonable enough that serious truck buyers could do the math and make it work. Then the price moved. It always moves. 40 became 50. 50 became 60. Higher trims pushed past $70,000, then $80,000. The entry-level trim that made the original announcement feel exciting quietly disappeared from availability, replaced by configurations that put the Lightning in direct competition with luxury vehicles from brands that have spent decades earning that price point. Ford had not spent decades earning it. They spent one product cycle assuming they would not need to. The market delivered its verdict quickly and without mercy. Lightning started sitting. Days on lot climbed. Production targets that once felt conservative became impossible. Ford slashed Lightning production by half, an admission so loud it barely needed a press release. And still, the core problem remained completely untouched. The price. Walk onto a Ford lot today, and the evidence is impossible to ignore. Lightnings lined up in rows. Floor plan interest accumulating on every single one of them. Every single day, they do not move. Salespeople who 2 years ago were managing waiting lists are now managing a very different conversation entirely. One that starts with aggressive discounting and ends with buyers still walking away unconvinced. A former dealership manager told me something recently that crystallized the entire situation. He said the Lightning was priced for a buyer who wanted to make a statement, but the F-150 has always been bought by people who need to get something done. That is the gap Ford never bridged. The buyers who needed a capable, dependable work truck looked at $80,000 and did the math instantly. The buyers willing to spend $80,000 on a statement vehicle looked at a Ford badge and kept scrolling. Ford built a truck for a customer that did not exist in the volume they needed. And $50 billion later, the lots are full and the sales board is nearly empty. If the Lightning is Ford's most expensive mistake, the Mustang is their most embarrassing one. Because the Lightning at least had the cover of being a new venture, a calculated risk in an uncertain market. The Mustang had no such excuse. This was Ford's most iconic nameplate, a car with 60 years of cultural gravity behind it. And they drove it straight into the worst sales collapse in its entire history. The numbers are brutal. Ford sold just 44,000 Mustangs in all of 2024. To understand how catastrophic that figure actually is, consider this. Ford is selling fewer Mustangs right now than they did when the car first launched in the 1960s. Not fewer than peak years. Fewer than the very beginning, when the car was brand new and the country was still figuring out whether it wanted one. But the number that should truly stop you cold is not the Mustang's sales total. It is what outsold it. The Mustang Mach-E, the electric crossover SUV that borrowed the Mustang name and infuriated purists from the moment it was announced, outsold the actual Mustang by 7,000 units in 2024. Ford's most storied performance car, the nameplate that defined an entire category of American automotive culture, is being outsold by a family SUV wearing its badge like a costume. The redesign that was supposed to reinvigorate the Mustang did the opposite. Ford raised the base price significantly, putting entry-level trims into territory that required serious justification. Then they stripped out the interior elements that gave the car its character and replaced them with a giant touchscreen that nobody who actually wanted a Mustang had ever asked for. Generic digital displays in exchange for the tactile, purposeful cockpit feel that buyers had loved for generations. Premium pricing in exchange for less of what made the car worth the premium in the first place. When sales collapsed, Ford's response made everything worse. CEO Jim Farley stood in front of investors, stared directly at the worst Mustang sales numbers in 60 years, and said the car was priced right. Read that again. The worst-selling Mustang in history, and the man running the company told the world the price was not the problem. That statement did not just reveal a miscalculation. It revealed a level of disconnection from the actual buyer that should concern anyone watching this company make decisions right now. Because when a brand's most iconic vehicle is being outsold by a crossover that borrowed its name, and leadership responds by insisting nothing is wrong, you are no longer watching a product stumble. You are watching an identity crisis play out in slow motion, one quarterly report at a time. The Lightning and the Mustang get the headlines. But the inventory crisis spreading through Ford's lineup right now is not limited to two models. It is everywhere. Every segment, every price point, every vehicle Ford makes is telling the same story, and the story is not a good one. Start with the Bronco. When Ford brought it back, the reception was unlike anything the brand had seen in years. Buyers were ecstatic. Waiting lists stretched for months. Dealers were marking them up $20,000 over sticker, and buyers were paying it without hesitation because the Bronco felt like something worth waiting for, worth overpaying for, worth the excitement. That energy was real, and it was powerful, and Ford had every reason to believe it would last. It did not last. Walk onto a Ford lot today, and you will find entire rows of Broncos sitting under the open sky, covered in dust, untouched for months. The hype that once had buyers writing deposits on vehicles they had never even seen in person has completely evaporated. And the prices never came down fast enough to replace excitement with value. When the emotion left the transaction, there was nothing underneath it to keep buyers at the table. The Ranger tells a different version of the same story. The new design is genuinely impressive. Most automotive journalists agree it is the best-looking Ranger Ford has ever produced. Better proportions, more modern stance, a legitimate competitor on aesthetics alone. And it is sitting on lots longer than any previous generation of the nameplate. Because a good-looking truck does not close deals when the price point kills the conversation before the test drive even begins. Design gets buyers through the door. Value gets them to sign. Ford keeps delivering the first part and abandoning the second. Then there is the Maverick, which might be the most revealing failure of all. Ford built the Maverick with a specific buyer in mind. The person being priced out of full-size trucks. The buyer who needed something capable and affordable and practical. That buyer existed in enormous numbers, and Ford knew it. Then they raised the Maverick past $33,000, $34,000, $35,000 for mid-level trims, and that buyer did the math, looked at their options, and went somewhere else entirely. A dealer in the Midwest recently told me something that has stayed with me. He said for the first time in 30 years, he has customers walking out, not because they cannot find what they want, but because they cannot afford a single vehicle in his showroom. Any vehicle, any trim level, any model Ford makes. That is not a product problem. That is a philosophy problem. And it is sitting on every lot Ford has from coast to coast. There is a reason Ford became Ford. And it has nothing to do with horsepower figures or design awards or quarterly earnings calls. It has everything to do with a philosophy so simple and so powerful that it transformed not just a company, but an entire country's relationship with the automobile. Henry Ford did not just build cars. He looked at his own factory floor, at the men working the line every single day, and decided they should be able to afford what they were building. He restructured manufacturing from the ground up, not to maximize margins, not to chase premium positioning, but to bring the price down far enough that ordinary working Americans could own a vehicle. That decision did not just build a successful company, it built the American middle class's first real relationship with personal transportation. It was a philosophy that said, Ford is for you, the person doing the actual work, not just the person writing the checks. That philosophy survived for over a century. Through wars and recessions and oil crises and market collapses, through every disruption the automotive industry ever faced, Ford's core identity remained intact. We build vehicles for working Americans. We build them tough. We build them capable. And we build them at prices real people can reach. Ford is now systematically dismantling that identity, one price increase at a time. And they are doing it at precisely the wrong moment in history. The average transaction price across Ford's lineup has increased 38% since 2019. 38%. In a period where real wages have not kept pace with inflation, where interest rates have pushed the average monthly car payment above $700, where everyday buyers are already stretched to their absolute limit, Ford decided this was the moment to chase BMW and Mercedes on pricing. Without the decades of luxury brand equity, without the premium ownership experience, without the dealership atmosphere, or the craftsmanship reputation that justifies that price point for buyers who have other options. The market they left behind did not disappear. It went to Hyundai. It went to KIA. It went to brands who recognized the gap Ford was creating and filled it immediately with better equipped vehicles at prices that actually made sense for the buyers Ford abandoned. First-time car buyers are not considering Ford. The average age of Ford's customer base is climbing. Brand loyalty that took generations to build is declining for the first time in decades. Ford is catched between two markets right now, and winning neither. Too expensive to hold their traditional buyers, not prestigious enough to attract the luxury customers they are pricing themselves toward. A brand without a clear answer to the question of who they are for does not stay relevant for long. And right now, Ford cannot answer that question. Ford made the pricing decisions. Ford built the strategy. Ford greenlit the lineup and set the sticker prices and told investors everything was fine. But there is a group of people absorbing the daily financial consequences of those decisions who had no seat at that table when they were made. The dealers. And right now, they are furious in a way that goes beyond frustration and starts resembling something closer to financial desperation. Here is how the economics actually work at the dealership level, because this is the part most buyers never think about. Dealers do not own the vehicles sitting on their lots outright. They finance them through what the industry calls floor plan financing. Every single vehicle on that lot has a clock running on it from the moment it arrives. Every day it sits unsold. The dealer is paying interest on it. The vehicle is simultaneously depreciating and accumulating carrying costs. The weather is working on the paint. The tires are developing flat spots. A truck that arrived worth $60,000 is worth a little less every single morning. The sun comes up and no buyer appears. Now multiply that across rows of F-150s, stacks of Lightnings, Broncos with dust settling on hoods that nobody has touched in months. This is not one slow week at one dealership. This is a systemic inventory crisis spreading across Ford's entire dealer network. And the financial bleeding is real, and it is daily. The forced discounting spiral that followed made the situation worse, not better. The only way Ford moved significant F-150 inventory in the final quarter of 2024 was by authorizing discounts of $12,000 and $13,000 off MSRP. Mustang dealerships began offering similar reductions just to clear floor space. When a manufacturer has to discount that deeply, simply to generate basic sales velocity, something fundamental has broken in the relationship between the price they set and the value the market actually assigns to the vehicle. And here is what makes dealers genuinely angry beyond the carrying costs and the forced discounting. Discounting at that scale destroys something that is very difficult to rebuild. It trains buyers to wait. The moment the market learns that Ford vehicles will eventually be discounted $13,000, the rational move for any buyer becomes patient. Why pay sticker today when waiting rewards you with a significantly better deal tomorrow? Ford's desperation pricing is actively undermining every future transaction their dealers need to survive on reasonable margins. Other manufacturers watched Ford's premium pricing experiment play out in real time and began adjusting their own strategies accordingly. Hyundai and Kia moved faster and more decisively into the space Ford vacated. The gap Ford created is being filled permanently, one conquest sale at a time, while Ford's dealers absorb the interest charges every single day. Here's where the story shifts. Because everything we have covered so far, the Lightning disaster, the Mustang collapse, the inventory crisis spreading across every segment, the dealers bleeding daily carrying costs on vehicles nobody is buying at the prices Ford set, all of that pain has created something real for a prepared buyer. A window. And windows like this one do not stay open forever. The discounts are already happening. $12,000 off F-150s, $13,000 off Mustangs, Lightnings sitting on lots with dealers who need them gone yesterday and are willing to have a very serious conversation to make that happen. These are not rumored savings or theoretical negotiations. These are real numbers being offered at real dealerships right now by salespeople who have quota pressure stacking on top of floor plan costs, stacking on top of an inventory problem that is not resolving itself. That combination is leverage. And leverage belongs entirely to the prepared buyer. But before you walk into any Ford dealership, you need to understand something that most buyers miss completely. A discount on the wrong vehicle is not a deal. It is a transfer. The dealer gets relief. You get the consequences. And some of the vehicles sitting on Ford lots right now are discounted for reasons that will follow you long past the day you sign. The F-150 Lightning is the clearest example. Used Lightnings are already trading at a fraction of their original sticker price. The depreciation curve on this vehicle is not a gentle slope you can manage. It is a cliff. Without a federal tax credit propping up the purchase math, buying a Lightning new today means watching a significant portion of your money disappear in real time, regardless of how compelling the discount looks on paper at the point of sale. The vehicles that represent genuine opportunity right now are the ones sitting unsold because of price perception and inventory timing, not because the market has correctly identified something broken in the fundamental ownership equation. Base F-150 trims with high day supply. Mavericks at distressed pricing, where the discount reflects desperation and not defect. Those are the deals worth pursuing with everything you have. Know the day supply before you walk through the door. target the end of the month when quota pressure is at its peak. Get competing quotes from multiple dealers and be completely transparent about it. And be willing to walk away without signing anything, because a dealer sitting on months of unsold inventory cannot afford to lose a serious buyer, and they will prove that the moment you head toward the exit. Ford's mistake created this window. Your preparation determines which side of it you land on. Ford built an empire on a promise, a simple, powerful, century-old promise that said the vehicles rolling off their production lines would be built for the people actually living and working in the real world. Not for investors, not for luxury positioning strategies, not for boardroom presentations about premium brand transformation. For the buyer standing on the lot with a budget, a need, and a loyalty that had been earned over generations of reliable, affordable, capable vehicles. That promise is what made the F-150 the best-selling vehicle in America for over 40 consecutive years. That promise is what brought the Bronco back from the dead on nothing but goodwill and nostalgia. That promise is what gave the Mustang 60 years of cultural weight that no other American performance car has ever come close to matching. And Ford broke it. Quietly at first, then systematically, then completely. The $50 billion electric bet was not the mistake in isolation. The Lightning was a reasonable gamble in a market genuinely moving toward electrification. The mistake was everything surrounding it. The pricing that assumed loyalty had no ceiling. The interior decisions that stripped character in exchange for screens nobody requested. The CEO standing in front of investors defending sticker prices while salespeople watched serious buyers walk out of showrooms empty-handed. The complete and total disconnection between the decisions being made at the top and the financial reality being absorbed at the bottom by dealers, by buyers, and by a brand that is now caught between two markets and winning neither one. What comes next for Ford will not be comfortable. Expect more discounting. Expect factory adjustments. Expect a long and painful reckoning with the question of who Ford is actually building vehicles for in 2026 and beyond. Brand loyalty lost at this scale does not return quickly. The buyers who switched to Hyundai and Kia are not waiting to come back. The first-time buyers who never considered Ford in the first place are forming habits and preferences with other brands that will last decades. But here is what you need to hold on to after everything covered today. Ford's pain is a prepared buyer's opportunity, and only a prepared buyer's opportunity. Walking into a dealership without the right information right now does not guarantee you a deal. It guarantees you become part of someone else's solution. Before you set foot anywhere near a showroom, download the free ebook Avoid These 17 Cars in 2026, linked in the description below. Depreciation charts, real owner reliability data, the exact models mechanics see coming through their shops over and over again, completely free. The dealers are sweating, the inventory numbers are public, the leverage is sitting there waiting. The only question left is whether you are prepared enough to use it.